Good morning. This week, American markets hit a new record high. India gave back some gains sharply on Friday, and oil just had one of its worst months in 5 years. A lot moved. Let me tell you what matters for your money. Let's start with the S&P 500. Friday close 7,580, a new all-time record. Over the past 1 week, the index is up around 1.49%. The AI trade is still leading. Microsoft had a strong week. Oracle jumped over 6%, and the broader AI infrastructure stories continues to pull money in. If you hold a global ETF with US exposure, and if you watch this channel, I hope you do. You had a good month. Here is what that looks like in real numbers. 10 lakh rupees in a broad US equity ETF at the start of this week is approximately rupees 14,900 more valuable today. Not bad for 5 trading days of doing nothing. Now, India, and this is where the week ended on a different note. Friday was ugly. Sensex fell 1092 points. Nifty dropped 359 points to close at 23,547, down 1.81% for the week. Two things drove it, and both are worth understanding. First, uncertainty around the US Iran ceasefire. There are reports of a preliminary deal that could reopen the Strait of Hormuz. Markets do not like uncertainty. Even when the underlying news is broadly positive, people sold first and planned to ask questions later. Second, and this one has a longer tail, the India Meteorological Department revised the monsoon forecast down to 90% of the long period average. That means a slightly below normal monsoon is now the base case. Here is what that means for your money. A below normal monsoon means food prices stay elevated. If food inflation stay elevated, the RBI has less room to cut interest rates, and equity markets, which has been pricing in rate cuts this year, do not like that. That is the real anxiety behind Friday's sell-off. One day, one data point, not a trend, but worth watching. Now, the one that affects all of us here in the UAE directly, oil. Brent crude closed around $91 this week, WTI at 87 for the month of May. Oil has fallen nearly 17%. That is the sharpest monthly drop since 2020. The driver is the US Iran situation. Reports of a preliminary ceasefire and a possible reopening of the Strait of Hormuz, a shipping lane that carries roughly one fifth of global oil supply. If that opens fully, supply goes up, prices come down. For India, this is structurally good news. India imports about 85% of its oil. Lower prices reduce the import bill, take pressure off the current account, and support the rupee. When oil was running above $100, which it was not long ago, the RBI was managing a stress currency. This is a meaningful relief. The dollar rupee rate is currently around 94.98. The rupee has recovered modestly from its recent highs. For those of you remitting money off to India regularly, you are getting a better rate than you were a few months ago. So let me give you the week in one sentence. American equity keeps climbing on AI momentum. India stumbled on Friday, but falling oil, a rupee finding its footing, and broadly solid corporate earning means the bigger story is intact. One bad Friday does not change a structural view. And if you checked your Nifty app on Friday afternoon and felt your stomach drop, that is exactly what bucket one is for. You do not touch your equity when the market sneezes. You draw from your stability bucket, let equity recover and stay the course. That is not just a strategy, that is what separates disciplined investors from everyone else. That is your chai for the week. 5 minutes, market covered. If this was useful, subscribe. New content every week built specifically for NRIs in the UAE and Gulf who want straight, honest answers about their money. I'll see you in the next one.